So welcome to our weekly webinar. This is Naeem Aslam, Chief Market Analyst at AvaTrade. And in today's topic, folks, we are going to discuss the US non-farm payroll, which is also known as the mother of all economic data. Of course, we will discuss everything in a lot more detail, why this particular data is called or is known as mother of all economic numbers, and how it can really move the entire global equity markets, the Forex market, commodities, and of course the fixed income market as well. But before we do that, let me just provide a little bit more information about myself. So as a chief market analyst at AvaTrade, I had the entire research department for AvaTrade. My experience spans well over 10 years of trading experience. I have worked with Bank of New York Mellon, Bank of America as an equity and as a hedge fund trader. Now at AvaTrade, of course, my job is to have the research, as I said earlier, and produce those invaluable information for you guys on a daily basis in various formats. Now that is all about myself. Now I think it's time for you guys to introduce a little bit about yourself. So as always, I want to begin and open the floor to you guys by starting with the first question out of three. The first one is that please say yes if you have been trading for less than a year. Okay, so I see a lot of yes coming in, so that means that we'll just have to adjust the pace accordingly. Now, please say yes only if you have been trading for over 2 years. Okay, all right. So what I see from your remarks and from your answers is that we have more beginners and we have more intermediate in this group, which is well over 100 participants right now in this group. So what this enables me, this helps me to really adjust my tone and of course the level of complexity for you guys, so that you know what to look out for, and then how basically it makes things a lot more easier for you guys to understand. Now the final and the question is, please say yes if you have attended any of my previous webinars. Fantastic. I see a lot of people coming back and back. That is the point. That is the most important aspect. So for those of you guys who are coming back, bear with me for the first 2-3 minutes while I just continue with my routine. But then, of course, everything will be new from there onwards, right? So folks, I'm going to begin our webinar, but before we do that, as always, it is important for me to go through this disclaimer and risk warnings. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors, who will be in much better position to help you and guide you with respect to that. Now, the most important aspect of this webinar perhaps is for you guys to understand and know how to contact us in order for you guys to learn and gain more knowledge about the ongoing development in the markets, right? Because if you are sitting in front of a computer and then you don't know why a specific derivative has moved enormously to the upside or to the downside, there is a way for you guys to contact me or to AvaTrade. So the first way of doing that is Twitter, which is right in front of you guys. As always, and I always say this every single week, if you guys haven't signed up on Twitter, please do sign up on Twitter, because we live in an era where things really change every single minute by every single tweet, especially over the last few weeks or last few days, especially. Things have been moving enormously based on riots and based on civil arrests, which are ongoing over in the United States. So how do you get all that information? How do you get the information with respect to the economic data, economic numbers, which one of them is just about to come in less than 13 minutes time, which is the ADP report. You get all these numbers out through Twitter, and in order for you to get them, you have to follow us on Twitter. So that is the handle right here in front of you. And when you go onto that, I will show you on a Twitter account as well. The first thing that you guys do is you turn on the notifications, and then you get all the important feeds. Secondly, on a daily basis, I produce videos on AvaTrade's YouTube channel. Over here, we produce two different sort of videos. One is your fundamental video, where I give you all the information in a very digestible way. The video is no longer than 4 to 7 minutes. And then the second one is your technical analysis video. Or in this video, I go in a lot more deeper and a lot more details for that video. Now, for Twitter, as I said, I will show you guys. So that is the handle, folks, over here. Just go and follow if you like to, and then you'll get all the information. Just like when the UK Mail Services number came out, we tweeted it straight away. The number was much better. It produced better results for the sterling. So if you were trading sterling dollar and then you didn't know at 9:30 what really happened, by looking at the tweet, you know, okay, the economic number came out at 9:30 and the number was better than the previous number. So meaning that the UK economy is improving. So you get that as well. And then also we're producing less than 2 minutes videos on that as well. And again, it is a very valuable information for you there. As for AvaTrade, make sure that you only and only follow the account which is verified, because we are verified by Twitter, and that blue tick is just the indication of that. Now, in terms of AvaTrade, the YouTube account, so again, go to YouTube, AvaTrade. Here are all the videos for technical and your other fundamental videos as well. So again, you can go and look at them and then get all that information with respect to the specific stocks or with respect to specific indices, and also the overall markets as well. Now, in terms of economic data, of course, you can go to our website, avatrade.com, or you can go to Forex Factory. Now, as I was saying, just in about, let's say, 6 minutes time, we are going to get the first component for the US non-farm payroll data. If I take you guys back to our agenda for the presentation, what it says, that the importance of the US non-farm payroll, what makes the US NFP reading, what instruments to trade, the current state of markets and analysis, defining levels and strategies. Obviously, the importance of the US non-farm payroll data is that it is the most important data, which gives you the actual health and inside and outside information about the US labor economy. Of course, in terms of its components, when it really comes to its components, like as I was showing you guys just now, so in a 15 minute, in a less than 5 minutes, we are going to get the US ADP non-farm employment change. So the previous reading was minus 90,000. Before that, it was minus 20,000. So let's see if we get a number which shows that yes, employment is improving, meaning that we are not seeing more people unemployed, but in fact we're seeing people be more coming back into the market and then getting jobs. That would be certainly positive. Now, in terms of assets, what assets you can trade anything which is dollar denominated. So for example, we will be looking at the euro dollar price action very, very closely. In just 6 minutes time, we are going to get this data, and then we are expecting to see huge moves in euro dollar, and of course in the gold prices as well. Again, we are going to change the price action to 5 minutes and then see where the price is really going to take us. In terms of immediate resistance, 1729 is the level for gold right over here. That is the level that we will be looking at if the price reaches to that level. And then in terms of immediate support, we are really looking at this double bottom, the first one here, the second one here, 1717. So let's see where the price goes from here. Obviously, if the price breaks below this 200 moving average, then obviously, you know, this is going to be negative. If it stays above that, and then it is possible for price will go here, and then perhaps it may not stop there. It will go right next to the next level of 1731, and then after that to these levels, well above those levels. Just to define those levels quickly, I know we are taking it very fast, but I just wanted to show you the market reaction, how the market reacts when the data comes. So in order to do that, first thing what we're going to do is we're going to go to our daily time frame, see what the trend is. When we go over here, we see that everything is forming higher highs. The trend is to the upside. This is your 200-day moving average. This is your 100-day moving average. This is your 50-day moving average. Okay, everything looks very much hunky-dory. So let's form our support and resistance zone, just because there's only 2 minutes left with respect to this data. So let's form those support and resistance zones well ahead of the time, and then see that if price is going to come. So the biggest support on a daily time frame is just going to be below this one, right? And then this support zone is going to be running up to here. But the immediate support zone is going to be a 50-day moving average. And that 50-day moving average, my friends, it is trading in around 1710. That is where the 50-day moving average is really trading at. So also value 1709, right? So when we go to 5-minute time frame, so we will pick out the 1709. Again, that level is below this one. So that is your daily time frame. That is your daily time frame support, well below that. But in a short term, in this one, we really don't want to pay too much attention to this. We just wanted to pay attention to bigger zone. One is here, the other one is here. So let's see how the data comes. The data is about to come. Let me make this one smaller and bring out the the Bloomberg platform. The news will come right over here when the ADP numbers will come. As you can see, there's only 1 minute left for the ADP data to come, and we are going to trade that. We are going to look at that. There you go. The number is, the initial move is to the downside. The number is still not out. It looks like that the number is going to be weaker. Remember, we already know that the number that we are expecting is going to be, needs to be better than minus 900,000, right? So let's see what the number comes in. The number hasn't still come in yet. The prices are moving. Gold looks a little bit weak, but again, this means nothing. We don't trade until the number is out. We wait for the price to come into our levels. The level is right just below this one, below that 1709, or just near this 1711. The other one being 1729. The number is going to be out. There you go. ADP Institute US lost 2.7 million. 2.7 million jobs in May, folks. That is the number. And then here you go. What I'm going to do is I'm going to give you that tweet. If you are following us, remember that I said to you that we do that. So what I'm going to do is I'm going to give you that tweet here, so that you guys can really see. Now, after this, we are quickly going to go back and then see the price action. So you see the number was better because this is 27, and that means that the economy has picked up. So once again, we go back to our Forex factory and then see how the number has really come. You see, much stronger number, shows that employment is improving over in the United States. And then this means that anything which is like Dow Jones weekly, we should also see an uptick in that one as well. Look at those futures. They are ripping. They are ripping. They are ripping to the upside, folks. Everything is just ripping. If I go to the S&P 500 index and I look at that movement as well, it is also ripping, folks. Ripping. That is the word. Ripping. Everything is just moving to the upside in terms of a risk on assets, and everything is moving down in terms of a risk off assets. We've already seen that when we look at the gold price, which I've just shown you guys. You see over here, there's a massive sell-off coming on. We're not going to do anything with this one. We're going to wait for the price to come at lower, let it come, and let it come to the 1709. But if the price starts to move back above the 50 moving average on a 5-minute time frame, that could be your entry back in, because we still have a lot of other things. So another headline is coming in where it says that the ADP report, pandemic continues to weigh on business on all sizes. So that is what I mean. And then another headline coming in, which is it says that ADP job report loss likely peaked in April. There you go. Job losses have peaked in April. Things are getting better and better. So if you want me to send you these headlines on a Twitter, so let's do that. Let's quickly send you these headlines as well, so that those who are attending and those who are, oops, this headline didn't really go. Okay. Come on, my computer. My computer is going a little bit slow, as you can see. Sorry about this. The computer was obviously very, very slow. It didn't respond to any of that. So there you go. So, and now what we can see, obviously, in terms of gold prices, they are still selling, folks. They're still selling. And then let's wait. This is why I said to you, we don't see traded on the news, but we trade after the news. We wanted to wait. We wanted to wait for the price to come into the levels, which was 1709, and then see if the price, if the 50-day moving average on a daily time frame holds or not. If it holds, that's great. If not, then we're going to wait for the price to come into a better area of support, which is 1691, or perhaps even less, 1665. So let's see, but I don't think price is going to go to that point, but it is really going to be here. So this really emphasized the importance that we really talked about of the economic data of the ADP data. So far, does that make sense? Hello? Okay. Okay, so the questions are that some of the questions that I've been just going through, that how will indices react? Obviously, folks, I have shown you that the Dow Jones index has ripped to the upside. Look at the momentum. So obviously the number was much better than the anticipation. This is a risk on rally, and then that is why we are seeing green on the screen, green on the screen, green on the screen. What are we seeing on the screen? Green. That is it, folks. Follow the green. Green is on the screen. So this shows that the markets are likely to continue their journey to the upside, whether we are speaking of European markets, whether we are speaking of the US markets, because when I click onto the S&P 500 index, when I go to, the FTSE 100 index, when I look at the 5-minute chart, it is green over here as well. So green is the dominant color when it comes to indices. Now it says that why there was a sell-off in gold. Obviously, the gold sell-off started to happen because there's a lot of optimism in the market about economy reopening and things becoming a lot more better than they currently are. And then that really kick-started this momentum. That really helped the risk on rally, and then trigger the risk off rally that we are seeing. I hope that answers your question. Guys, we're not going to look at Kiwi pair, I'm sorry, or because this is more about the euro dollar. I can certainly have a look at it, and then again we can see that the dollar has become even more well. This is very intriguing, because what we're seeing in the euro dollar is something very interesting. The reason being because now what we see is the euro dollar falling, right? So what does that mean? Because earlier in the morning, what we saw was we experienced that the euro dollar was increasing was gaining its strength, because the dollar index was falling. The dollar index was falling because the chances were that if the unemployment situation continues to improve, it means that the Fed doesn't need to keep its monetary policy lower and dovish for a longer period of time. If the Fed doesn't keep the monetary policy lower and dovish for a longer period of time, then it means that dollar index is likely to move higher. And this is what we are seeing. This is the reason that we're seeing the euro dollar moving lower. And this concept of the dollar against the Kiwi, against the yen, against the sterling, it remains the same. Absolutely same. Nothing changes with that. Now, let's quickly run the levels. Let's quickly look at the price levels for all different indices as you guys have requested. So as always, now what we're going to do is we're going to move away from the price actions, the current price action that we have seen, and we're just going to do a bigger term analysis like always, right? So when we do that, first of all, what we do is, as always, we go to our weekly time frame, and then we look at 3 different moving averages. So this one is your 200-week moving average, this one is your 100-week moving average, and this is your 50-week moving average. Now, clearly, when we look at the price action, it broke above the 200-week moving average, in around 3rd of May. And then we had another bullish price action when the price moved above the 100-day moving average, as you can see, right? Now the price is about to challenge its 50-week moving average. Now, all of these ones are weekly moving averages. Now, forget about this Bollinger Band that I have going over here. But in terms of a support and resistance zones, I am really focused on these levels, just the top of this candle and the top of this candle. But obviously, if the price breaks below this, the 200-week moving average, it's not this level which is really going to help us. It is this level that everyone will be targeting. So we can say that, okay, can we move this level then to a better level, perhaps where the 200-week moving average is? Perhaps this could be a support level which can really act as a support. Yes, that is the answer for it. And if the price ever see any sort of a retracement, when it comes near 100, as it is in battle with 100-week moving average, or when it starts its battle with 50-week moving average, this is the level of a support that we will be looking at. If it breaks below that, it is not this level, although it is a still valid level to act as a support, but the main primary focus is going to be these levels that price will be really looking at. Now, let's compare the price action of the S&P 500 index with the S&P 500 as well. Now, when we compare, apples with apples, like this is Dow Jones weekly, this is at S&P 500 weekly. What we see is the S&P is above the 200-week, 100-week, and the 50-week as well. Obviously, the price action for the S&P 500 index looks incredibly stronger than the Dow Jones index, because the Dow Jones index is still just struggling to move above the 100, and it still has one more hurdle to clear off. But the S&P has already done that. So the S&P 500 index looks very strong. And also, what I would recommend you guys is that on our Twitter and again on our fundamental news on AvaTrade blog, we posted a chart which shows the current highest bearish positions taken by the hedge funds on the S&P 500 futures. What does that mean? That means that the speculators or hedge funds, they believe that the S&P 500 index is likely to fall. So they're building on their bearish position. That is the recent CFDs data confirmed. But when we look at the price action says no, there is nothing which can stop this price, and the market is likely to continue its journey to the upside. This is a very exciting webinar, without any doubt, because of the ADP number and because of the contrary information that we're getting from the speculators that I've just mentioned that to you, and of course in terms of a price action as well. Again, the recording will be uploaded on YouTube channel for you guys to look at. Now, when we switch the time frame and go into our daily time frames, what we see over here is something a bit more intriguing. For the Dow Jones index, we can see that the price crossed above the Bollinger Band. This is the reason that I had a Bollinger Band on it, and then obviously showed that the price was way overbought. And now it is again, the upper line of this Bollinger Band is very much in line with the 200-day moving average, because now we are on a daily moving average, daily time frame. So these are all daily moving averages. They are no longer your weekly moving averages. These are your daily moving average. So it shows that yes, there is a potential of sell-off, but the sell-off is really not likely to happen until and unless the price really goes in around above this, or in fact when the price goes into this level of resistance which we have marked, that is where the actual sell-off is likely to happen, because at the time the price would have really pierced this Bollinger Band and it would have moved out of that one, right? So that remains for your Dow Jones index. But when we are speaking of the S&P 500 index, now what we can do is we can insert the Bollinger Band by going over here, accelerators, trends, and then Bollinger Band. There we go. Excuse me. Now what we see is that this is your lower line. The lower line hangs in here, and this is your upper line. This is daily time frame. Now we're going to change it to our day. So that was weekly, and now we change it to daily time frame. Now obviously the price is coming very close to touch that upper level of the Bollinger Band, and if that happens, then again there will be a clear signal that yes, it is likely that the price will see some sort of a retracement. But the reason that I'm showing you this, and the reason that everything is very much in contrary to the CFTC data, the speculators data, which show that the hedge funds are taking a lot more bearish positions on this, is this particular area, this particular point, that the 50-day moving average is about to cross above the 100-day moving average. This hasn't happened since at this time, since, to be very precise, it was back in October when the 50 crossed above the 100-day moving average, and ever since the price had a beautiful and tremendous run. Now, can we see that again? Of course, it can happen again, but only if the 50 stays above the 100 and then the momentum continues its direction. Then we can see a similar trend without any doubt as well. And then it is likely as well at the time that it is also likely that the price will, the 50 will also jump above the 200-day moving average, because 50 hasn't gone above the 200-day moving average since, when was the crossover happen? It happened right over here, which was back in 2019, but in March 2019. So if that happens, at that time when it happened, we can see the strength of this move, right? The S&P only crossed a few times below the 200-day moving average, but then the moment that it used to go back up, we used to see some really stellar rally, and then we have already seen that now with respect to the S&P 500, that it is above its 200-day moving average. So we are pretty safe in terms of equity markets price action. Okay, folks. Now, this is where I'll give you guys the opportunity to ask me a few questions before we call it a day. So please feel free to ask as many questions as you can for the next few minutes, and I will try to answer them. Okay, so someone is asking what is a risk on and risk off trade. So risk on trade is when investors try to buy equities. So when you start buying equities, when the indices is starting to move higher, that is your risk on trade. And risk off trade is when investors start to sell stocks, and when they start to sell indices, that is your risk off trade. How will this affect Ethereum and the dollar? If you are talking about Ethereum, folks, like seriously, I do not believe all those bogus logos which is going on with the risk on and stock on, all of that stuff, that there's no correlation. Absolutely. What do you expect for the oil price? Oil prices are likely to consolidate. They have gone too fast, too much, but still there's a little bit more room left. What is the difference between the ADP NFP? So ADP NFP and the NFP. So today we have the ADP data. This is your employment data. On Friday we are going to get non farm employment data. So basically the unemployment rate, the unemployment claims, the jobless claims, the initial claims, all of these important ingredients, those are the numbers that we are going to get on Friday. And if Friday's number comes strong, folks, this equity market is really going to rip all the roofs off, and it will continue its hunt for the next high. Why am I entering on gold long? When I cannot answer that for you. Someone is answering. So when can you enter gold long and buy? Just follow the analysis that we've done on here. See if those price levels can really help you. Because if we look at gold price right now, let me just check quickly, see how the price really reacted after that. There you go. It seems like that the price is likely to move from 1709, which is our daily time frames 50-day moving average. Seems like this is a good area of support for now. Why? Okay, the question is that economic data is still weak, but why Nasdaq is going higher? Nasdaq is driven by bigger stocks like Amazon and stuff like that, which are pretty much driven to be on the basis of coronavirus. And so we are going to do a special masterclass on coronavirus and the stocks that are very much influenced into that. So you will hear more on that later on. Every Wednesday, remember, there's a webinar that I am holding. Can you discuss the oil basings on the price chart? Again, we will do the price analysis. We're just a little bit off from here. But I think with respect to oil prices, folks, we are very much close enough to reaching our peak. So it's really a consolidation from here. All right, folks, that's all for today. I really appreciate you guys coming and attending this. And I will see you guys next week, same time, same place. Thank you.